you for joining us today for the webinar. I'm just going to give it a few seconds for all the attendees to join in. In the interim, I think it's worth noting that if you've joined and trying to say hello to me or your colleagues, don't worry, I'm not being rude to you by not responding. You are all muted. So as demonstrated here by my colleague, we cannot hear you. Similarly, if you are trying to wave at me or your colleagues, it's worth noting that your videos are disabled, so we also cannot see you. So for those of you who have gotten made up for today's webinar, I do apologize. And for those of you who are still in your PJs in bed, it's a pleasure. If you do want to chat to us or your colleagues, you can, again, it's probably not worth speaking because we can't hear you. I would suggest using the Zoom functionality. There's the chat and the Q&A functionality, which I'll elaborate on in a second. Okay, I'm going to share my screen now so we can get started. Okay. Perfect. Cool. Again, thank you for joining us today. As promised, we're going to go through the earnings assistant. I'm going to take you through a live case, obviously a hypothetical case. Before doing so, I just want to quickly give you guys a little bit of a background as to, one, why we developed the earnings assistant, and two, what exactly it has to offer. Okay. So the logistics for today's session is I want to be quite strict in keeping with the 1 hour. So we will end it at 12. I know some of us need to go to our local tops and start queuing for Monday. But yeah, if you do have any questions throughout, obviously, as I said, you are muted. I would suggest using in the Zoom taskbar, you'll see there's a Q&A button. If you've got questions relating to anything I've said or to the earnings assistant itself, I would suggest posting it in the Q&A section. I've got 3 panelists with me, Charles, Anna Marie, and Jonathan. If you've got any questions, obviously they're going to be looking at the Q&A section. They will try to answer it for you. If time does allow, towards the end of the session, you know, if time allows, I'll revisit the Q&As and hopefully I can respond, you know, during this session. Worst case, do not worry if we don't get to the questions during this 1 hour session. What we will do is record all the questions and responses there too, and we will circulate that at a later stage. Okay, so we will be recording this, this demonstration, so that too will be available at a later stage. So do not worry if you miss anything or need to go get a cup of tea during this. Do not worry if you miss out a little bit of detail. This will be recorded and made available to you. Okay. So there is a photo of me back when being in an office was cool and legal. So yeah, as I said, my name is Dean Behrendt. I've been working with Monroe Forensic Actuaries since 2011, so 9 years. And in that time, I've seen thousands of industrial psychologist reports, obviously from the actuarial side. So trying to quantify IRP reports. Also, over the last few years, I've worked very closely with industrial psychologists themselves, more specifically trying to give a little bit of training and insight as to the numerical side of, you know, the medical legal reports. So trying to help on the quantum side. I've been fortunate enough as well to be in consultations with advocates and attorneys from both the actuarial side as well as the industrial psychologist side. So yeah, I'm relatively clued up as to, you know, some of the challenges that the actuaries face, as well as some of the challenges the practical challenges that the industrial psychologists face, both on the plaintiff as well as the defendant side of things. Okay, so that's a little bit more about me. The earnings assistant itself, so why did we create it? At Monroe Forensic Actuaries, we've found that in order to continuously provide the industry with extraordinary service, we need to keep looking for innovative opportunities. And the development of the earnings assistant is one of those means to try and add value to the industry. Okay, so that's effectively why we created it. You know, that's the more altruistic side of things. Then on the more you know, the more efficiency, more selfish side of things, internally, we estimate that up to 60% of IRP reports that we receive cannot immediately and accurately be used to quantify claims. Okay, that's quite a drastic statement. What that means is that typically in the IRP reports that we receive, there's gaps in information, which means that, in order to quantify the claim, we need to make assumptions. And now the nature of the gaps obviously vary from case to case, but typically the gaps involve missing information when it comes to dates and ages of increases, fringe benefits, so certainty as to what fringe benefits the claimant was receiving, promotions, progressions, the terms of the income, the monetary terms of the income, that's a big one. And then quite often we actually don't have clarity on what is the basis for the loss, that it's not overly apparent, and we need to now make an assumption. Now, obviously, this poses a big risk, not only to the attorney, but also to ourselves in terms of and the experts themselves, so yourselves, should I say, in terms of potentially overcompensating or undercompensating the claimant, and that's what we want to try and take care of with the earnings assistant platform. Okay, so that's why we created it. What is it? So it's a free to use online platform that enables IOPs to easily convert the narrative of a case into a logical basis for calculation. Okay, so it allows for the accurate comparison of different income streams and fringe benefits from various monetary periods, and it also provides a concise visual summary of the findings, which acts as a logic check or a reasonability analysis that you can use when concluding your medical legal reports. There's also a printable summary. Okay, so that's the other value add that can be attached to the final medical legal report, which can be used by the actuary to quantify, or it can be used by the attorney to get a synopsis of what the case entails, and also probably more importantly to yourselves, it also gives an indication of it's a synopsis of the case for your colleagues. So if you're doing a joint minute, obviously if you've got a summary which clearly stipulates, what is it that you are saying, like what is the nature of this case, what is the nature of the loss. We hope that when doing a joint minute, for example, you can very quickly see what your colleagues are saying, and from that you can have a conversation as to where you agree or disagree. Okay, so I'm now going to quickly jump into a live example. So currently I've got, again, a made-up case. So let me just escape here. So yeah, so you should be seeing on the left-hand side of your screen, sorry that I've had to kind of minimize it. I didn't want to keep referring to something that you couldn't see, but on the left-hand side of the screen, you should see the narrative, just a completely made-up example case here. There's the narrative of the case on the left-hand side of the screen, and then on the right-hand side of the screen, I've got the earnings assistant platform open. Okay, so I'm going to go through this case, with you and walk you through, where you put the different inputs and how the earnings assistant works. Okay. So you'll see here, now I'm referring to the right-hand side of the screen, the earnings assistant platform. I'm currently logged in. So once one logs in, once you've registered on the platform, you should see this screen. Hello, dean@monroefa.com, very friendly. It immediately gives you a dashboard of all previous cases or reports that I have done. So this is a list of all the previous cases that I've done. You can see I started with some steam and in creativity, Demo Lovato, and then I lost a little bit of that. The claimants' names sort of get a bit more generic. So here you'll note the list of all the claimants' names there. I know we've gotten a few questions already around confidentiality. One thing definitely worth noting is that we take confidentiality very seriously. So in terms of the claimant's name, that is optional. One doesn't need to fill that in. Okay, and therefore, when you're inputting the details of the case, we don't necessarily ask for the claimant's name, so it can be kept anonymous. The reference number here is obviously your reference number. You would input that. The description here is just a very general description of the case. Okay, and that's, I'll show you now where you input that. But we see that being advantageous in that, you know, once you've obviously built up a longer list of cases, you know, on the system, at any stage down the line, you can quickly search back using this description. So say, for instance, if I type in grade 12 here, it will bring up all the cases where I've used grade 12 in the description. Okay, so it's quite adaptable. Obviously, you can find what works for you, but in this description, I would suggest, you know, using like a broad narrative of the case that you have dealt with. So that, again, at a later stage, you can quickly go back and refer to it. You see here, obviously, I've varied how I've used the description. Some I use the level of education. Some I've used the sector in which the claimant worked, and then also I've used the idea of, you know, putting the nature of the loss down in the description. You know, so if at any stage you deal with a similar case, you can go back and look. Oh, you know, I did a case where the profile of the claimant was similar. I think it was similar. Let me quickly see what I did there. Okay, which moves me to the next function here on the right-hand side. Okay, last modified when you last edited it. You'll see these three functions here. The clone function, if I click on that, what it will do is it will make a copy of that specific case. So again, tying that into the previous point, where, you know, if you've got a case and there's some similarities to previous cases that you have done, you can click on the clone button there, and it'll create a copy of that report. And then once you've got the copy, you can go and edit it, and obviously then just adjust the details of the claimant and the case, you know, the date of accident, etc., to match your current case. And all the previous progressions and changes in earnings points will be there. You can also adjust that to fit with your previous case. So you don't necessarily need to start from scratch, so to speak. Okay, and delete is very self-explanatory, I hope. Okay, so that's the first, you know, this is the first view here. You will also note that there will be a few tutorial videos embedded in the earnings assistant. I'll point them out as we go through it. But if I click on this video here, you'll note that, okay, you probably can't hear it, but there is me speaking, guiding you through how to create a new report. I did ask David Attenborough to do the narration, but unfortunately he was busy. So you've got to listen to me throughout. But yeah, we've hoped to try and make it, you know, pretty user-friendly throughout the platform. So there are little guiding videos that will take you through the case, and examples of how to input, you know, the variables into the case. Okay, let me get cracking. So I want to create a new report here. I click on the Create New Report button, and it'll take me through to this screen. Again, if I don't know what to do, I can click on this tutorial video. Okay, I'm going to now refer back to this, you know, the Word document with the details of the case when I'm inputting it here. Okay, so the reference number, yeah, also probably worth noting that required fields are reference number, date of birth, and date of accident. Okay, date of birth and date of accident are obvious ones. Obviously, for us to be able to illustrate to you the retirement age and dates at which progressions take place, we need to know how old the claimant was, and also when the date of accident was. Okay, so you can get a good visual guide of, you know, of the basis of the claim. Okay, so the reference number, I'm just going to copy it there and paste it there. Okay, so the reference number is there. The name of the claimant, copy it there. Obviously, you can type it out yourself if you want. The date of the birth, there's two options. Either I can use the calendar function to fill in the date of birth. Alternatively, I can type it in. So 24th of June, 1986. Okay, and it will, the formatting of the dates, I think you can type in a few different types of, you can type in the 24th of the 6th, 1986, and it will recognize, okay, maybe not that one, 24th of June, 1986. Okay, there, it recognizes it like that. And the date of accident, again, using the calendar function, I can go and select the 13th of April, 2015. Okay, description, again, that's relatively up to you how you want to use it. You can see here there's an example pilot, grade 12, degree, Gauteng. You can, again, the value there is to be able to refer to something similar, at a later stage if you've got any familiar cases. Okay, the gender, in this case, Mr. Example being Mr. is a male there, so you can toggle between male and female. For the earnings assistant platform by itself, that's not overly important, but obviously when a summary is printed out, for the actuarial calculation, the gender does have implications. So it is good to differentiate between whether the claimant was a male or female. Obviously, we probably need to add more options there, but that we can revisit at a later stage. Okay, once I've filled in everything there, I click Create Report, and it will take me through to this screen here. Okay, so just to explain this screen, this is where we will input the information of the case. At the top here, you'll note this is the generic details that we've previously inputted. It gives us an indication of how old the claimant currently is based on their date of birth and how old they were at the time of the accident. Okay, so you can quite quickly get an idea of, if I'm saying a promotion, for instance, would happen at age 35, what I'm really saying is that a promotion would happen in a year's time. So just kind of orientate yourself with what you're saying. If I want to change it at any point, I can click on the edit button and make changes here and click save, and those will obviously be incorporated. Okay, this screen here, there are three prominent tables that we will refer to in this screen, and those are the three tables where we're required to put in information. Hopefully none of them are new to you. I know pretty much every single IRP report that I've read encapsulates these three sort of headline tables. One being the career history, so the claimant's career history prior to the accident. Okay, so that's where we ask for factual earnings up into the date of the accident. Okay, here's also this I button. This is a video, so if I click on that there, you'll see it opens up a video with how to fill it in. So in this career history table, that requires the user to input every single change in earnings that happened from the time that either the claimant can remember they started earning, or from the time that they started earning, an income when their career started, all the way up until the latest change in earnings prior to the accident. Okay, so that's what one would input in the career history. So we're wanting to get an idea of what was the claimant's career history like prior to the accident. Okay, chronologically, that's how this table will work, and I'll input it, fill it in a bit. Then the next table here, well, the next two tables here are the injured income and the uninjured income. Okay, so the injured being what has happened since the accident to date, and what will continue to happen, as a result of the accident, all the way from the date of the accident up until retirement. Okay, so currently, the first date or age here in the injured and uninjured income tables will always be the date of the accident. Okay, so for the injured income and the uninjured income, we're referring to from the date of accident all the way up until retirement. So that should always be the first date at which we're considering is the date of accident. Even if they weren't earning an income, zero income is important to note that they weren't earning an income. Okay, so if I actually go now and refer back to Mr. Example, our very creative name here, the narrative is that Mr. Example started working as an assistant for XYZ Industries from the 13th of January 2010. Okay, so again, I go 13th of January 2010. Is that before or after the date of the accident? Because the accident was in 2015, it's obviously before the date of the accident. Therefore, it goes into the career history. If I try to put in a date here that's after the date of the accident, so say, for instance, if I try to go 13th of April 2016, and I try to push add, I should get an error saying, please note that this date falls after the date of the accident. Okay, so it's just a kind of an internal check as to, how to fill in the tables. Every date in the career history should be a date prior to the accident, and every date in the injured and uninjured incomes should be a date after the accident. So you'll get that message as well if you try, the opposite in the injured and uninjured tables. Okay, so the 13th of January 2010. Okay, you'll note it just simplifies it to 13 and then 3 letters of the month, and then the year, was earning 10,000 rand. Okay, now the frequency, obviously the options here, we've got per month, per week, per fortnight, it's every 2 weeks, per year, or was it a once-off payment? So in this particular case, it was per month. Also just worth noting that we've tried to, again, make it relatively easy to use, trying to guide the user as much as we can when using this. So you'll note that if I scroll over frequency, there's a brief explanation as to, like what one should be considering when thinking about frequency. Similarly with terms, there's a tooltip here that comes up. What do we mean by terms? By terms, what we're referring to is what date was the amount here that we've just inputted here, what date was it the amount applicable in or from. Okay, so for example, if we received a payslip and now we're reporting income as per payslip, the terms of that income would be the date of that payslip. So that would be the date at which that income was applicable. Because, from a monetary financial side of things, we know that 100 Rand in today's terms is very different to 100 Rand 20 years ago. Okay, so that's what we're referring to by terms. And in this particular case, we just refer to terms by month and by year. Okay, so we just need to track what month and year was that amount applicable. So in this particular example, we were lucky enough, I know it's one of the big challenges in the industry, is to receive collateral. So we were lucky enough to get a payslip, and the terms of that payslip, because it was dated November 2010, I can put in here November 2010 there as the terms. And then increases refers to by what, how was the income, how did the income change over time? Typically in this, on the Earnings Assistant platform, we've got 3 options here under increases, the one being earnings inflation. Okay, so that's basically stating that in real terms, the claimant's income didn't increase, it just stayed neutral. Okay, so just year after year, they didn't get any promotions or real promotions. They were kind of just in the same or similar position, earning a similar income, just getting that annual inflationary adjustment. No increases or none is when you know for a fact that the claimant's income in nominal terms has remained the same over each year or year after year, in which case they're actually losing out on money year after year. So that's the none option. And straight line increases. Straight line is when you've got 2 points, and what the straight line assumption allows is that every single year between the 2 points, the claimant would get the same real increase between the 2 points. Okay, and I'll show you how it looks in the graph at a later stage, the difference between the two. But basically, using straight line is when you aggregate the increases over many years between 2 points. Okay, so in this particular case, earnings inflation, would be the case here, because we know that in November the payslip was received and they stopped working from December, so it was actually their last month there. In the comment here, the comment section, again, it's quite adaptable. It's basically just a space for you as the user to elaborate on this earnings point. Okay, so when I refer to dates here or rows in each table, effectively each of those is an earnings point. And the job, bluntly put, the role of an IOP in the medical legal world is to try and report on every single change in earnings, so every single earnings point from the date of accident up until retirement for each claimant. That's effectively the role of the industrial psychologist, is to report on every single change in earnings, so every single earnings point from the date of accident up until retirement. The career history obviously helps to, substantiate why you're saying what you're saying, or you're concluding what you're concluding, but the injured and uninjured income obviously inform the nature of the loss. Okay, so once I'm satisfied that I've inputted that, I will click add, and you will see here, just above the comment here, a quick graph will appear. So if I click on that graph, this immediately gives me a graphic representation of what the claimant's career history looks like. Okay, so you can see that in the career history, currently we've only got one earnings point, okay, and we've assumed earnings inflation, increases there, and the date the date at which it starts is January 2010. If I go look at the graph here, you'll note that it starts in January 2010. So the earliest date that we go back, this graph will start, and the graph should always end just before the date of the accident. Okay, so we know date of accident in April 2015, so the graph goes all the way up until the start of April 2015. Okay, so now going back to this case here, the claimant stopped working from 1st of December. Okay, so that's a change in earnings. So that therefore needs to be filled in here. So I'm going to put 1 December 2010, and now they became unemployed. Okay, so I've had a lot of questions. What do we do if there's periods of unemployment? It's always, it's actually critical to include periods of unemployment in the earnings assistant, because again, when you look at the graph, you'll note that during this time frame there was 0 income earned. Okay, so I'm going to put 0 income there, and here as a comment I'm going to go unemployed and click add there. Okay, so again, if I go to the graph here, quickly look, you'll note that from January 2010 there was an income there, and then as soon as it got to December 2010, 0 income. Okay, to quickly inform you as to, you might be seeing numbers that are strange there. The numbers here in the graph represent what the monthly income is in today's value. Okay, so even though we've put 10,000 Rand per month there, and when we look at the graph, we're seeing 18,141 Rand, you might be going, wait a second, something's wrong. No, in fact, what the graph does is it converts all the incomes from different monetary periods into current terms. So you can compare apples and apples. Okay, so that's just a quick explanation. If I want to add another change in earnings point here, which I need to do because the claimant returned to work from the 1st of June 2011, earning 14,000 Rand per month, and as per payslip dated October 2013, so I'll fill in October 2013 there, and they were working as a senior assistant. Again, in this comment, you can put whatever you want. You can say it's as per payslip. It's quite dynamic. If I quickly go to the graph here, you'll note that instead of it being 0, now suddenly it jumps up again in June 2011. Okay, you can also see that now the 10,000 Rand per month in 2010 terms and the 14,000 Rand in 2013 terms, if you look at them in current terms, there's not as big a difference as what one may have thought. So it's 18,100 versus 21,200. So roughly a difference of 3,000 Rand as opposed to 4,000 Rand, what it looks like there. Okay, so that's already useful to note. Okay, then going back to Mr. Example, from the 1st of March 2014, they started earning 20,000 Rand per month. Okay, as per a payslip for February 2015. Okay, and that was as a supervisor. Okay, and I push add. Okay, so now going back to the graph here, you'll see it's updated. There's another little spike when I preview it there, 20,000 Rand. And it's now almost 27,000 Rand because that was in 2015 terms. Okay, you'll also note here, next to the save button, there's a button for benefits. Okay, and that's one of the benefits or value adds that we hope to bring here, is that the user can quite easily stipulate the benefits associated with each earnings point. So next to each earnings point, there's an opportunity to input benefits here. And in this particular case, the claimant earned a 13th check Okay, so we tick yes, they were receiving a 13th check. There's an option for retirement contributions here. If I click pension, you'll note I can either put in the amount or I can put in the percentage. If I put in the amount, it'll calculate the percentage and vice versa. So that's the employee contributions I would put in here. So how much is the employee putting aside based on their basic salary each month or year, whatever the frequency is here. And on the employer side, similar, is the employer putting away money towards the claimant's pension, yes or no? I input that here. In this particular case, there wasn't, so I would click none. And I think that's one of the big value adds here is it will hopefully encourage you as the IFPs when you are trying to, get information, get the collateral, it'll hopefully encourage you to ask, specific questions. So if the claimant says, yes, I was receiving retirement fund contributions from my employer, this will now encourage you to ask either what percentage, what contribution were they making, percentage of your basic salary, or what amount were they putting aside, and are you putting aside towards your pension each month? And then you can input that here. Similarly, there's an opportunity to put in overtime or any other benefits or taxable benefits there. Similar functionality, you can either put an amount in there and it will calculate what percentage of the basic salary is that amount. Alternatively, if you do know the amount, you can put in the amount here. So for example, if I put in 10%, it'll tell me 10% of this 20,000 Rand here is 2,000 Rand. Okay, so it'll automatically calculate that for you. And allowances are any other additional allowances. So where they're getting housing, etc. And you can put that value in there. The value of the allowances and the monetary terms of the allowances will always mirror the frequency and the terms of the earnings point that you've put in here. I think that's an important point to note. So in this particular case, we've got 20,000 Rand per month. The value here that I would input as an allowance would be a monthly allowance, and it would be in February 2015 terms in this current one. Okay, obviously in this example, we've just got a 13th check. When I click save, you'll note here on the right, it goes from benefits there to cost to company. So immediately I can see that if I see cost to company here, benefits have been added to this particular earnings point. Whereas when I see benefits here, it means that no benefits have been added. Therefore, this income here is the only income that's being included. And the cost to company now is 21,667 Rand, which is 20,000 Rand plus a 13th check. Okay. This, going back to the case, this income of 20,000 Rand per month plus the 13th check was the income that the claimant was earning at the time of the accident. Okay, so that's important to note. So therefore, in terms of the career history, we don't need to input any other earnings points because this was the latest change in earnings prior to the accident. Okay. Now, the next step is to report on what has happened since the accident. And I know the order between injured and uninjured varies based on your experience. Currently, we've got injured. Before uninjured, we can always revert or give you the option to switch the two. The flow that we're thinking is chronologically, you're reporting on the history, and now the claimant's hopefully telling you what has happened since the accident. Okay, so going back to this case, since the accident, the claimant did not return to work and received no income from the date of accident up until the 1st of April 2020. Okay, so we know since the accident, which is the date of the accident, no income was earned. Okay, so zero, the month and terms are irrelevant in this case. And the comment here says from accident, but we can say unemployed or lost employment, whatever you want to say. Okay, and I'll save that. Now again, currently how this table works, how the earnings assistant works, is it will always calculate or illustrate the career based on the latest earnings point here, all the way up until retirement. Okay, so at the moment, we filled in zero income from the date of accident how it would interpret that is it's zero income. That's the only change in income that's happened since the accident, and it continues this income all the way up until retirement. Okay, so currently the default retirement age is 65. If you want to change it, you can click there and change it. But right now, you'll note that the graph, if I look at the graph, it'll be zero from the date of accident all the way up until age 65. Okay, we know that Mr. Example started working here from the 1st of April, 1 April 2020, okay, and they started earning 400 Rand per day, working 3 days per week. Okay, we've got very simple calculator, as you can see in the tooltip that appears here. You can use plus, minus, multiplication, or division. So here I can go equals 400 Rand times by 3, and it will calculate 1,200 Rand, and that is per week, and that was confirmed by a payslip dated April 2020. Okay. And now once I can put general worker here. Oop, or rock, no, just general work. There we go. Okay, and push add. Now, if I go back to the narrative, what are we saying the claimant's potential is in the future, now in their injured state, based on what the OT is saying, based on what the other medical experts are saying, we foresee that straight line progression from current date to the upper quartile of the semi-skilled table based on the quantum yearbook by age 50 is foreseen. Okay, so currently the claimants, because this is very close to today's date, they are likely to get straight line increases. Okay, so I'll change this to straight line. It will save that. Again, the purpose of straight line is it's between 2 points. So if I've got straight line here, the assumption is that I need to add another point, because it needs to go from this earnings point to the next earnings point. Okay, so age 50 is when the claimant's likely to reach their career ceiling. So there is this functionality on the earnings assistant that I can type in either the date or the age. In this case, I can type in literally age 50, and if I click there, it will return the date at which this claimant would be 50 years old. Okay, so we know date of birth, 1986, 2036 is 50 years later. Okay, and they're going to be earning 186,000 Rand per year, and it's based on the quantum yearbook 2020. So I'll put in July 2020 terms, and that's going to be their ceiling. Okay, so once they've reached that, they are going to continue just receiving inflationary increases. Okay, so I would leave this as earnings inflation, and here I can say upper semi-skilled there, just as an indication of what I've used there. Okay, you'll note that the graph now shows me currently what I've inputted here. So no income from the date of accident, which is April 2015, all the way up until April 2020 when they start working. There, April 2020, and then between April 2020 and age 50, there's straight line increases. So you can see every single year there's a gradual increase, and the nature of this increase every single year, for those of you with a pocket calculator, is exactly the same amount in current terms. So the real value of the increase is exactly the same in every single year between the two dates. Okay, that's what straight line entails. If I take straight line out, for example, and just say earnings inflation, you'll note that this is how graphically the nature of the increases will happen, is that the claimant will be earning 1,200 Rand per week from April 2020, and then all of a sudden at age 50, they're going to get a jump in income. They're going to get a promotion, so to speak. And that's very important for you to note. The difference between straight line and earnings inflation is that the straight line aggregates increases over time, whereas earnings inflation, if you know a promotion is going to be received or was received at a certain point in time, that usually is a promotion, an increase in income at that point. And therefore, between the two, it's most common to use, or it's most reasonable to use earnings inflation between the two. Okay, but typically when you're dealing with long periods, long periods of time in your progressions, straight line is I know the commonly used one, because what it does is it aggregates the increases over time. Okay, lastly, sorry, in this case, for the injured income, the medical experts are foreseeing the claimant's going to retire at age 55, not 65. Okay, so I just changed retirement age to 55 there, and you can see this sentence changes quickly to 55. Perfect. That's the injured income done. What you can see here, if I scroll just below the uninjured income, you see a graph whereby all the three tables now are put together in one illustration, in one graph. So you can see now the career history here, and you can see the injured income. Obviously, the uninjured income zero because we haven't inputted anything. But this is where we hope that, as you are putting down your predictions or postulations, you can quite easily get a reasonability analysis, live feedback almost, of, is what I'm saying reasonable? Okay. So going back to Mr. Example here, from the date of the accident, we already know that at the date of the accident, the claimant was earning this income, because this was the last change in income that they had prior to the accident. So therefore, it's usually reasonable that at the time of the accident, the income here should be the same as the income that they were earning at the date of the accident. Okay, like as a reasonability check, that should always be where you go. If I quickly look at the graph now, I've put in the 20,000 Rand per month. You'll note that there's a slight decrease there from the career history to the uninjured progression. Why is that? If I quickly look up, I know that the income here, the terms was Feb 2015. Okay, so I need to just match the terms there, February 2015. And also there, because I can see cost to company 21, I know benefits have been added. So here, I just need to add, and I know it was a 13th check, push save. You'll note that the cost to company now changes. And if I look at my graph, it updates. So this then seems a little bit more reasonable, that at the time of the accident, the claimant was earning as per the last change in earnings, that they had reported. Okay. In this particular case, we see the claimant progressing again in a straight line. So we're using 2 points. Again, no judgment on this, on the accuracy of this particular narrative. It's completely hypothetical. Okay, so straight line increases up until age 45. Okay, so how that would look, again, straight line, sorry, so let me change that first to straight line. Again, straight line works between 2 points. So this is the starting point. Now I need to input the end point. So we know straight line up until age 45. So I type in age 45, I click there. It returns the value or the date at which the claimant would be 45 years old. Okay, we know that it will progress in a straight line to the median quartile of Patterson's C3 total package. Okay, these figures were taken from the Quantum Yearbook 2020, and that figure is 563,000 Rand. The frequency is per year, and the terms, because it's the 2020 Quantum Yearbook, we know it's July 2020. And from age 45 here, we're saying that progression isn't likely. Okay, so they're likely to just continue to receive. They've hit their career plateau, their ceiling. Progression thereafter is likely to just be inflationary. Okay, so I'd leave that as inflationary. And in the comment here, again, it's adaptable. You can either put here career ceiling, or you can put the reference, Patterson C3 total, median quartile, Quantum Yearbook 2020. Okay. I know that probably doesn't make too much sense, but the idea here is, for this, on the earnings assistant, to try to be concise. If you need to elaborate, obviously, you're still going to have your medical legal report, and that's where we would suggest, elaborating on why you're saying what you're saying. That's part of the narrative. Okay, so once I've added this, click add. You will note that the graph, again, updates. So if I want to view the uninjured income in isolation, I can click on here, and I can see that all, that we're saying between the date of accident, they were earning the 20,000 Rand plus a 13th check, adjusted for inflation up until current terms. So it goes from 21,667 to now 29,190 per month. So that's what it's worth in today's value. So when you're doing your research and you're trying to say what is a reasonable career ceiling, and you're speaking to employers, like what are you currently paying your manager, your management, etc., you can know that if they're saying anything below 29,190 Rand, what you are then actually implying is that it's a decrease in income. Okay, so that's hopefully where the where the conversion of the monetary value comes in handy, is that you can go, is this a real increase or decrease, and therefore is what I'm saying reasonable or not? Okay, so once we satisfied that that is what we're wanting to say, we can go and have a look at our graph. Again, the graph itself may not immediately be easy to read. There is a training video on how to interpret the graph that's out. I'm not going to explain it in great detail here, but the graph, once you become familiar with the graph, we're hoping that it adds a lot of value, because effectively what it does, it illustrates the case, the nature of the claim, and two, it illustrates the claimant's entire career. So not only can you take value from this and use it as almost the foundation in which you can substantiate your opinions and your conclusions, but the attorney, when they're negotiating, they can also use it. So hopefully that adds value to them as well. If they can see, for example, in the career history prior to the accident, the claimant's career was scattered with periods of unemployment. So you would see lots of dips to zero here in this career history. What they can then do is obviously say that, if we then concluding that the claimant is going to be consistently employed in the future, there's a high level of risk that because in the past they've been unemployed, for extended periods, there's also a reasonable chance that they're going to have the same in the future. And therefore contingencies applicable to this particular case should be higher. Okay. For me, if I look at this graph, I can immediately pick up that the nature of the loss I can already see instantly. You can see here the nature of the loss was that the claimant was unemployed directly after the accident. So there was a direct loss in income for roughly 4 years here. And then since the claimant started working in the injured state again, there's a difference between what they would have been able to do and what they can do now. So they're compromised, their earning capacity has been compromised. And therefore, between now going forward, their current career ceiling is a lot lower than what it would have been. So that immediately you can pick up in looking at this graph. You can also see here is that the injured income cuts off well before the uninjured income. So there's early retirement. The claimant stops working a lot earlier than what they would have in their uninjured capacity. Okay, if you want to toggle off and just focus again on one particular progression, you can just click there and toggle the 2 or toggle the 3 on and off. Okay. So now once you're satisfied that you've inputted the progressions and they make sense, there are 2 functions at the bottom here. The first one is collaboration. Okay, we see this being valuable if I want to share this either with a colleague of mine. So if you've got a system where you have it being peer reviewed, you can use the collaboration function. What it will ask for is an email address to share this particular report with. And once you share it with that email address, the email address you inputted will get an email to say that, I have wanted to share this report with you. So I can type in, t@monroefa.com, for example. And when I send an invitation, the user at t@monroefa will get a notification that, the report has been shared. They can then access it from their side and make edits. Where we see this being valuable, obviously, is, in a workspace. If you're peer reviewing each other's reports, you can quite easily have access to that, as well as down the line, if we, in the system, if a joint minute arises, and quite easily, you're wanting to collaborate, you're wanting to come up with a single career progression for the claimant. if that's possible, you can then share this, and only this report will become accessible, to your colleague, to the other expert. They can then look at it and get an idea of what inputs you've inputted. They can make adjustments. You can very quickly, if you click refresh here and they've made adjustments, if you reload the page, the adjustments would be incorporated on your side as well. Okay. Then lastly, the export function. What this does is when I click the export function, it will open up a new tab and it will give me a very brief printout of what it is that I've said. Okay, so every bit, every change in earnings and benefits, etc., that I've inputted on this side, it pulls through into this report here. And it gives you a synopsis, so a summary of what it is that I've said. So here's the factual earnings up until the date of accident, which is the career history. Here's the injured income, and here's the uninjured income. Okay, you'll also note that on this particular page, we've got references here. Okay, so the value that we see, and this was from feedback from one of the IRPs, thank you to that person. How we see it being used is that, this is obviously the synopsis of the medical legal report, the summary of your report. You will still, however, obviously need to elaborate on how you got there, and expand a little bit with the narrative. So one easy way that you can refer to saying, you can refer to the table and almost substantiate why you've said what you've said is in the body of your report. For instance, you can say, with reference to TU02, in Annexure A, or whatever you want to say, progression from age 45 is not likely. So you can then refer in your report to every single earnings point in isolation and elaborate on that if need be. Okay, so that's the value there. Now, on the page 2, so sorry, it's a 2-pager. The second one gives you a graphical representation. So the graph that we've got here is pulled through into this. You'll note that the formatting is slightly different. Again, that's from feedback. We noted that when printing this out in black and white, it's not overly apparent as to what the loss is, and you can't easily differentiate between the three. That's why we've got this graph. So when it's printed, you can quite easily still see, like what is the career history, injured and uninjured progression. Okay. This download table as image function is how you can easily export this table into your report. Okay, so I'll quickly show you. I've got Annexure A here. If I click on this download table as image, it does exactly that. It downloads the table as a JPEG image. So you'll see here, an image will pop up. If I open it, it will give me this summary as a picture. Okay, now if I want to copy, I can copy that, and in my report, I can just paste it, and you'll immediately see here that that summary is now, can be copied across to my report. Similarly, with the graph here, I can download as JPEG image, and it will quickly download that for me. And again, if I right click and say copy, I can paste this into my report, paste, you'll see it pasted. The graph into the report. I can then adjust it if I want to fit it into one page, or I can put it onto the second page and elaborate, on it by itself. Okay, so that's the one way of integrating it. The other way is if I right click on this page itself and say print, here on the top here, it allows me to either print it if I do want to print it, or I can save it as a PDF. And if I choose the save as PDF function, I can click save, and it will save it as you see it on that screen as a 2-page report that I can then attach, as a summary to my own report. Okay, that's effectively it. Obviously, the value we see is one, it gives you a succinct synopsis of what you're saying, and it gives you the graphical representation of it. And it's also, you can copy that and integrate that with your report itself. Okay, I'm now going to quickly look to see if we've got just over 5 minutes left. Let me see if there are any questions that I might not have seen. I see 5 have been answered. Okay. Perfect. So it does look like the majority of the questions have been answered, but I'll go read a couple since we've got some time out loud. So what about a situation where only indirect losses are expected? Okay, so that's a good example. With the current functionality, unfortunately, it will be slightly long-winded. You know, how one would deal with an indirect loss. So by indirect loss, that's a situation where the loss will be derived by using differential contingencies. So effectively, with an indirect loss, the uninjured progression would equal the injured progression. Okay, so how we would in the current system fill that in is everything that's happened in the injured income would happen in the uninjured income. So all the earnings of 1,200 Rand per week there, I would input that in my uninjured income as well. And similarly, the career ceiling is going to be the same. So when you look at the graph, for example, the injured income from you know, the date of accident should mirror the uninjured income. Okay, so effectively that is uninjured and injured income here. That's how it graphically should look. So again, you know, if that's intentionally what we are wanting to say as the IOP, like this is the nature of the loss, the graph should look like that. In current format, you know, here under the comment section, one could elaborate that, you know, the nature of the loss is based on contingencies, you know, and therefore that is why the injured and uninjured income equate to each other. So yeah, so it should immediately become obvious or apparent that because injured equals uninjured, there isn't a direct loss, and therefore, you know, one needs to apply contingencies. We will, again, like this is a work in progress, and that's why your feedback and commentary is key. You know, we'll try add features that you know, are essential or recommended. So we are looking at adding in a very succinct way of being able to almost copy the one table to the next, in which case, you know, you can then intentionally and easily stipulate whether the loss is based on contingencies or not. Okay. Okay, is there space to enter simultaneous earnings, as in someone who earns an income on the side? That's also a very good question. Right now, we're only catering for one stream of income, okay? But in terms of how one would incorporate simultaneous income is either, you know, you could add the additional income as a benefit, you know, so you could say it was an allowance and put in the additional income there in the benefits tab, and obviously, you know, in the summary report, it would just include it as a benefit there, but you could elaborate in the body of your report as to why, you know, what was that additional income. But again, down the line, there's no explicit allowance for completely different income streams. So, you know, the earnings assistant, we know won't cater for 100% of claims. We do hope, however, that it will cater for the majority of claims. So with additional income, yes, you can include it in the current format. It just might not be as streamlined as what you may expect it. Okay, so you could add it, as I said, as a benefit here, as an allowance. Add it, you know, just make sure that the frequency and the terms of the benefit or the additional income matches what you filled in that same earnings point. Okay. I see, last question. I know time is important here. Will it display a final loss of income? So no. Yeah, so the purpose of this is to give you a graphical representation of what it is that you're saying, okay? So the purpose of the earnings assistant isn't to quantify the loss, okay? So it's supposed to empower you as the IOPs to get an idea of, you know, what it is that you're saying, you know, make sure, sense check it in some way. The actual quantification of the loss, that we would still need to hand over to the actuary to quantify it. Okay, so hopefully, you know, using the system and having the printout, you know, the synopsis of the case, that in itself will speed up the process, and I can guarantee you it will speed up the process, you know, to quantify the claim. But we aren't quantifying it on this particular platform. Okay, and contingencies, is there a section to insert contingencies? Currently, no. The reason, being is that with the contingencies, obviously that's for legal discussion, and right now, like the contingencies we may think are valid may not be, what the attorney thinks are valid. So I would suggest, in your report, in the body of the report, referring to, as I mentioned earlier, like specifics to this case, which should add or detract from the contingencies, one should add, to the calculation. Okay, so if there's lots of unemployment, for example, higher contingencies should be, applied, and you can put that in the, in the body of the report, which a lot of IRPs do already. Okay, but yeah, we don't allow for contingencies explicitly to be inputted, because we do know that in practice, the contingencies applicable and applied to are very often given by either the advocate or the attorney themselves. Okay, perfect. That is 12 o'clock, so I'm going to call it there. As I said, we will be making this, the recording, available to yourselves. The Q&A, we'll send out a copy of, the questions that were asked and the answers there too. And also you'll get, I think, a quick survey as to your experience here. Obviously, your feedback is valuable. So again, thank you for joining us. And yeah, from the team and I, if you do have any further questions, you can email tea@munrofa.com. Okay, standing TEA, not for tea, although we hope it's as refreshing as tea, standing for the earnings assistant. Okay, and yeah, do feel free to get in touch with us and me directly if you want any more input. Perfect. Thanks, guys. Thanks for joining. Cheers.